Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now another week and another highly anticipated money making opportunity has been presented, as you've seen yet again, with crude oil prices breaking out 580 points, gapping higher off last week's Sunday open, breaking out in fact over 7% over last week. And that's one of the most lucrative trends of the current financial climate that we find ourselves in right now. In today's highly macro-driven markets, they are fueling one of the greatest wealth transfers we have seen. It's presenting savvy traders with a series of exciting back-to-back money-making opportunities. There is no denying that 2023, that's certainly shaping up to be an incredibly lucrative year for traders, bringing with it a series of highly lucrative market-moving themes, from monetary policy failure to re-accelerating inflation to the global banking crisis 2.0. And just in case that wasn't exciting enough, traders are now on the cusp of being gifted one of the most lucrative money-making opportunities, with a full-blown global credit crunch and recession on the way, which may ultimately lead to the most hotly anticipated event of all, a Fed policy U-turn. As a result, commodities, they're starting to attract a lot of attention on a scale not seen since the global financial crisis in 2008, as traders, they rush to capitalize on the biggest macro themes driving the markets right now. According to economists, the current global economic backdrop, that is fueling a perfect storm for commodities. And regardless of whatever situation unfolds from here, the stage is already set for commodity prices to skyrocket and reach new all-time highs in the months ahead. Since the beginning of the year, commodity prices, they've already been on an absolute tear, firmly positioning themselves as the best performing asset class of 2023. But this could just be the beginning of the market's biggest year since 2008. Conclusive evidence shows that the current banking crisis, that was fueled as a direct consequence of soaring interest rates and liquidity risks, but the crisis is now about to get even bigger. The former IMF chief economist who predicted the global financial crisis in 2008, he has signaled that the banking system is headed for more turmoil as fragility within the financial system starts to become more and more obvious as policymakers continue to tighten monetary policy. Historically, 11 of the 4 tightening cycles since World War II, they've been known to set the economy up for an even bigger crisis ahead. And that's exactly what we're seeing play out right now. The macro-driven trend we're currently seeing, that's presenting traders with an endless flow of back-to-back opportunities. We're seeing gains of 10% or higher in a single week on commodities, sometimes in a single day. So just think about that for a second. In today's inflation-adjusted terms, your money sat in the bank will not even earn that return in a year or even 5 years from now. That's why it's no surprise that banks, they're struggling to retain deposits. Logically, it makes no sense why someone would want to leave their capital in the bank on a 0% interest rate while simultaneously allowing inflation to devalue their purchasing power, when they can achieve weekly returns of 10% or higher by actively managing their wealth through trading. Interestingly, the global banking crisis, that seems to have been a big wake-up call. The recent flight to safety that has seen depositors withdraw a total of $508 billion from the banks across the world in the last quarter, and put another way, that's $500 billion that has already left the banks. Last time we saw outflows of this sort of magnitude, that was during the 2008 global financial crisis, and more recently in the 2020 pandemic. On both of those occasions, that led to 2 of the greatest bull runs in history for commodity markets. Once again, we're starting to see all the telltale signs that indicate we could be on the verge of yet another record-breaking bull market for commodities over 2023. According to Bloomberg, a second wave of deposit outflows, that's coming as customers, they wake up to the existence of high returns on offer to them outside of the banking system. Right now, the gap between the benchmark interest rate and the interest paid by banks on deposits, it's at the wide end of historical norms, and that's continuing to widen at a record pace, creating a strong incentive for customers to pull money and seek a greater return elsewhere. Another reason customers, they're moving their money out of the banks is fear and uninsured deposits. Generally, the vast majority of banks, they insure deposits up to a value of approximately $100,000, which many trading brokerages, they're now offering insurance on deposits up to a value of $1 million. When you consider all of those factors, it starts to become obvious that a second wave of deposit outflows is already on the cards. And when that happens, commodity prices, they will hit all-time record highs. Whichever way you look at it, there's really nothing historical you you can point to for what is going on in the markets right now. The current macroeconomic backdrop, that is fueling one of the greatest wealth transfers of our lifetime. It's often said that history doesn't repeat, but it rhymes. And right now we have crisis on top of crisis, which, as traders know, that translates to opportunity on top of opportunity. This is the time that traders, they wait decades for, because it's times like these that make millionaires and billionaires out of regular people. There's a lot of traders out there. They completely missed out on two of the previous greatest wealth transfers in history, including the global banking financial crisis in 2008 and more recently the pandemic in 2020. The ones that saw the opportunity and knew how to capitalize, they accumulated life-changing wealth. And according to the World Wealth Report, 6.2 million ordinary people, they became millionaires for the first time during the 2020 pandemic, which is more than any other time in history. But history is about to be rewritten. Once again, we find ourselves at the forefront of one of the biggest wealth creation opportunities of all time. The explosive cocktail of events that is currently unfolding, that now presents the third greatest wealth transfer of our lifetime. You don't want to be the person that knew about this, had a chance to capitalize on one of the greatest wealth transfers ever, and you missed out again. According to Bloomberg, 1 in 2 people, they've now turned to trading to protect their hard-earned wealth from devaluation, whilst also capitalizing on the high returns on offer in this new economic climate. More millionaires and billionaires, they will be made this time round than ever before. The only question is, will you be one of them? Do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. So far this month at the Gold and Silver Club, we've already banked over 13,000 points profit across our portfolio, which we've transparently documented through our recent weekly videos. If you're trading at one lot, that's $113,000. And if you're trading at 10 lots, that's $1.3 million. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures this year, and we're still only in April. If you want to supercharge your trading results and make 2023 your best year yet, then go to jointhegoldandsilverclub.com now to learn how a mentorship program can help take your trading to the next level. So with that, we'll move over to the charts and we'll talk you through exactly what we look at here as we head into next week. Let's absolutely start off with crude oil here. This time last week, I was coming at you with the commodity report 1 hour before the Sunday open. We just had news from OPEC. They were going to cut output by over 1 million barrels per day. We were expecting a significant gap higher off the Sunday open, getting ready to bank a windfall amount of profit if that was to follow through. That's exactly what happened. Within seconds of the Sunday open, we were banking a windfall amount of profit with our clients at the Gold and Silver Club, banking 13,000 points profit on oil last week. So of course, for every 1 lot contract that you'll be trading, that is $130,000 on your portfolio. And for every 10 lot contracts you'll be trading, that's $1.3 million of profit. Ourselves and our clients absolutely crushed it to start off Q2 really with a bang here, with a huge gap higher on the Sunday open for oil. And I do hope that many of you also capitalized on the move there. So we had a very significant breakout, gapping higher to $81 per barrel. So the question now being, of course, what we're expecting next year as we continue to follow through into next week. So I'm going to just hold that for one moment on oil. And I just want to go over as well to both silver and gold. Then I'll come back to expectations here with oil. Gold. Now, for me, there's a very important point to be aware of as we go into next week. So, of course, on Monday, it's going to be Easter Monday. Historically, the day after Easter is a very risk-off day in the market. And there is a setup here where we had non-farm payroll on Friday. Commodities were closed for that. We have seen the dollar pick up some momentum on Friday. The euro started to pull back here. As you know, the euro is comprised into the dollar just over 50%. So expectation would be with commodities priced in dollars, if we do continue to see the dollar start to pick up momentum into Sunday and through to Monday, I would expect here the potential for a pullback on commodities. Not only that, we've also seen commercial positioning again in the last week. They've increased their sell short with the prices around the current levels at $2,000 per ounce. So this is very important because alongside that, bullion banks have also increased their sell short position, with gold currently trading at $2,000 per ounce. And you've got a lot of traders out there who are displaying cope by saying that they will basically, if they miss the move, it's okay, they will get in on the dip. So my expectation would be that you're not necessarily just going to see a shallow dip and then gold is going to go to the moon here. My expectation would be that you may actually have a more severe sell-off throughout the month of April, especially Monday. I would be looking for the potential to get a more significant pullback here. Now, the other point to note as well is that yes, absolutely, we're expecting higher prices for the metals over this quarter, but it doesn't mean it has to happen next week. We've already seen from low to high a 2,000 point move. Many hedge funds and money managers, they've got in late on the move, and in fact, again, in the last week, they've added to their overall position, FOMOing in right at the top of the move when gold has already broken out over 10% just within the last 4 weeks. Moving over to silver as another case in point. So we do still have exposure on silver, but we were buying right at the swing lows when the price action here was $20.10 per ounce. So in fact, we're getting very close to our ultimate short-term profit target on silver here as we're getting all the way back up towards $25.40 per ounce. This is where we're looking to take short-term profit off the table here. You can see right now silver is continued to remain exponential, but again, hedge funds and money managers, they've added quite significantly in the last week here when silver is already up 19% in the last 4 weeks. Went up another 5% last week. We were catching the absolute lows here, and we were able to catch the turning point with our clients at the Gold and Silver Club, which actually puts our position at the moment up almost 500 points here. So we're up also. So we've benefited massively from this 19% breakout to the upside from gold over the last 4 weeks here. But for us, it's at a level where we're looking to bank more profit into strength here. I'm certainly not looking to FOMO in and add to the position when we're trading basically at the highest levels since April of 2022. Another point to be aware of as it relates to gold, the top for gold last year was the day after Easter. So again, it's just something to be aware of, that this time last year we had Easter, which was on the 17th of April of 2022. The day afterwards was where gold started to tank. And then in fact, over the next 1 month, it broke down over 2,000 points. So you can go and have a look at this on your own chart. Just go back to silver as well. Silver, April of 2022, the top was also just after Easter. And then silver ended up breaking down over 550 points or $5.50. And that happened within the matter of 1 month. So typically after Easter, it's a risk-off time of year. Metals have already had a phenomenal run here over the month of March, which we've capitalized on massively, and also crude oil here as well. But again, I wouldn't be surprised to see some profit taking here as we go into next week. Again, I'll just put oil on your radar here as well. So we've gapped higher over 580 points on the Sunday open. We're taking the opportunity to scale out of a lot of profits last week. And if we do start to see a bit of dollar pressure to the upside, a bit of risk on going into next week, it won't take a lot for oil to start breaking down and then coming back down to fill the gap. And again, you've got the same situation that you've got on gold and silver right now. All of the traders that missed the move, the way they're coping is by saying that they will buy it if it gets a dip. So therefore, you're going to get a lot of liquidity, a lot of retail trying to come in. If you do get a dip, and you may not just get a shallow dip, it could be more severe, which would be typical at this time of year to happen after April. But I do think if we do get these sell-offs, it's going to provide a fantastic opportunity to sniper in and reload yet again at lower prices. As you know, if you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you do need to adapt your strategy to the current market conditions. Most importantly, utilizing a professional, research-driven approach. Whatever long-term goal you may have to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to really gift yourself a better 2023. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success is not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that don't work in these markets. If you want to get yourself out of the bottom 99%, and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort. You'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone, and if that's all you're relying on, the odds are already massively stacked up against you. If you want to change your results, you have to change your thinking. And if you want to learn our exclusive research-driven approach that is never taught to retail traders, only reserved for professional traders in the banks, the hedge funds, with access to powerful game-changing insights, including where the banks and hedge funds, they're buying and selling in real time, the key liquidity zones, so you can enter and exit the markets with pinpoint precision, the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycles, the sentiment in the market, the intermarket correlations. Then you need to join our mentorship program. As we head into the second quarter, we are in one of the greatest eras of wealth creation that we have ever seen. And if you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, then there's no better time than right now. And if you want to upgrade your income, then you need to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.